everyone, and welcome to Digital Assets Unfiltered. Today's topic is one that should help you navigate comfortably in this landmine of an environment. This introduction video is meant to keep you informed of the traps to avoid, so you do not lose money without doing the proper homework. If you're just dipping your toes into the crypto space or wanted to find out about more crypto information, this video will cover everything you need to know to get you started in this space. Before we dive in, make sure to hit that subscribe button and ring the bell for all the latest updates. Please stay to the very end for our rant of the day. You won't want to miss it. Let's get started. Let us start off by saying this is an introduction video to the channel. And we figured the best way to start this one off would be to educate people and provide awareness about the ways most creators in this space make videos. When you are new to learning about digital assets or crypto, you notice that every video has titles like "Buy these coins now before it's too late," or "This coin will 100x soon," etc. Please beware that these titles are completely misleading and damaging. I'll explain why later in the video. With that said, there is a few key terms that everyone new to the space must know the meaning of as we enter the Bitcoin halving in 2024 and possible bull run 2025. 1. FOMO, fear of missing out. Deep down, humans crave connection and engagement, but the relentless fear of missing out can take a toll on our overall physical and mental health. Fear of missing out, or FOMO, as it pertains in this space, is the anxiety or apprehension surrounding missing out on things like investment opportunities in certain coins. The problem with this in the crypto space is 99% of videos you see only talk about this. Titles will be, "These coins will 8x by the bull run. This is your last chance." When we first got into the crypto space, this was all that we watched. We fell for the hype just like most do when they first climb into the space. We are trying to give you tips not to get duped. 2. FUD, fear, uncertainty, and doubt. The term FUD is used when people share negative information about cryptocurrencies online. The person sharing may be accused of spreading FUD, or that people selling an asset are doing it out of FUD. This specific term can be very beneficial once you take the time to watch the crypto markets. Lots of time when there is negative headlines in the media, the price drops, and that allows you to buy at a much lower price, thus making you more money down the road. 3. Blockchain. Blockchain is a shared, immutable ledger that facilitates the process of recording transactions and tracking assets in a business network. An asset can be tangible, a house, car, cash, land, or intangible. Virtually anything of value can be tracked and traded on a blockchain network, reducing risk and cutting costs for all involved. 4. ETF, Exchange Traded Fund. No ETF has been approved yet in crypto, but it's coming, so get to know the term ETF. An exchange-traded fund, or ETF, is a basket of investments like stocks or bonds. Exchange-traded funds let you invest in lots of securities all at once, and ETFs often have lower fees than other types of funds. Spot ETFs directly hold the cryptocurrency, building a portfolio that naturally replicates the performance of the digital assets it contains. Other crypto ETFs invest in future contracts and agreements to buy or sell crypto at a predetermined date and price. Use case: crypto coins that actually will be used in society in some form. The term use case stands in a nutshell is based on technology that will have some sort of use in the real world. A couple off the top of my head that people are raving about would be XRP, Ripple, XLM, Cardano, ADA, HBAR, Hedera, Hashgraph, Algorand, and the list goes on and on. Many gaming coins as well that people are hyped about. 5. HODL, hold on for dear life. HODL is a term derived from a misspelling of hold in the context of buying and holding Bitcoin and other cryptocurrencies. It's also commonly come to stand for hold on for dear life among crypto investors. This is the most popular way of investing in this space and in the traditional stock market space. This does not pertain to day trading or day traders. They are in it for the quick buck, and they take on the risk of losing it all or making a lot quickly. This takes a ton of time and learning to be successful with. no different from trading stocks. Same methods, but with different manipulation. 6. Bull run. During a crypto bull run, the values of crypto assets constantly rise throughout the course of a market cycle. 7. Bear market. A bear market is defined as a market that has lost 20% of its value in the last few months from its previous high point. Sometimes you lose 60 to 80%. The crypto space will soon be bombarded by these institutional investors like BlackRock, JP Morgan, Vanguard, etc. once there is more regulation. Is that a bad thing? It's not. If you can invest in the right coins before this happens, your bank account will thank you. Our own opinions are that once the institutional investing starts ramping up, you can throw the previous bull run data out the window. We could end up with a super cycle at some point between this bull run coming up and the 2030 bull run. Most of these huge financial institutions will ramp up investing in the crypto section once the ETFs start getting approved by the SEC. If you are going to invest in crypto, we suggest investing and building up your portfolio for the long haul. Why, you ask? At some point within the next 2 bull runs, you will not be able to get these coins at the current prices in our opinion. Every bull run happens within 4 years according to history, and once that is over, it is a bear market until then. If you want to make the most of your investment, make sure you do not FOMO buy in at the top of the bull run. It can be a long, painful wait until the next bull run to make your losses back. Whatever you do, if this happens, do not sell. That is the only way you will lose the money, depending on the coins you invest in, excluding high volatile coins that are new. If you do not have money to invest, we suggest not doing it until you do. If you HODL the right coins, you will be just fine in the long run. Only invest what you are willing to lose. We do not suggest daily trading unless you truly put in the time to research and learn how to read charts and use the tips and tricks that people offer up so you can practice at a low investing scale. Last but not least, our rant of the day. The overall duping the subscriber model needs to change. Those tired messages are old and show zero originality at this point. Many creators in this space will do anything for a view. You will see that when people are making videos and hyping you up with ridiculous price highs for coins and scaring you with the sky is falling low predictions. It happens daily and it can drive you mad if you let it. These creators have mastered a clever psychological technique, employing it in their videos to build anticipation around a coin as if they possess exclusive knowledge known only to them, like it's insider trading. However, they cleverly insert the disclaimer, "This is not financial advice," either at the start or the conclusion, fully aware that the entire video is centered around that very notion. Please avoid these disgusting ways. Creators dupe you with false predictions and sadistic ways. They do videos to psychologically get you emotional invested with nothing but opinions. The horror stories are endless. Please be careful. One more thing before we go. If you are new to investing in crypto, we recommend that you do not stare at your investments daily. It will drive you nuts. Patience is key, and invest long-term. If you found this video informative, don't forget to give it a thumbs up and share it with your fellow new investors. Also, let us know your thoughts in the comments below. Until next time, stay informed, stay curious, and happy investing.